This is a trade recap for Monday, May 11th, 2026. Number 7 of 10 for one and done phase 5. And our first trading day back from Friday's loss. So I've taken the weekend to think about it and just kind of really reflect on what happened, what I did right, what I did wrong, state of the market, kind of all that stuff, and process it and see what lessons I could extract and apply. So if you are new or struggling with day trading and you want to learn how not only just to trade better, but how to analyze your trades, how to kind of back test, how to kind of sort out the noise, and again, how to figure out how to, or what you did right and what you did wrong, I'd highly recommend you get a coach and a mentor, and a high level one at that. For me personally, that's Pat Mitchell over at Trick Trades. You can find him at tricktrades.com. He's been at this for over a decade now, and he proves that he knows his stuff day in, day out, live on screen share every single day. And I can't think of a better person to learn from. If that's someone you are interested in potentially, again, getting involved with and seeing what they offer, check out the webpage at tricktrades.com. If you want to see the information he puts out there or the quality of the information he puts out there, check out his YouTube page. Like I said, he's been at this for over a decade, and he has over 1,700 videos on his YouTube page. It is massive. With that being said, if you check the description below, you'll see some links to the memberships. Save you a little money first month when you give it a shot. It is an education service. It is not an alert service, so manage your expectations appropriately. Now, with that being said, let's go ahead and jump into this. So, this is for Monday, so doing a little bit of catch up still. Like I said, if you're new here, just how this kind of works is we only trade SPY and Qs, so SPY on top, Qs on the bottom. These blue levels you see, these light blue levels, are the levels struck by Pat starting the night before, and then refining the morning of, and then he builds our trade plans around them, and that's what we stick to. The levels do not get altered. Once they are set, nothing changes. I do add my risk levels to show what I'm risking off of, and that's just a personal choice. So on this one, as you can see, we were opened up between these two levels on SPY and pretty close to this level here on Qs. So basically, we're just kind of watching and waiting to see, all in all, what was going to happen. When we opened, Pat had advised us to kind of, again, give this thing a moment to just see what it wants to do, especially considering what happened on Friday with how much it moved up, especially on Qs. So, put my entries up. So, market opens up and Qs just rips. SPY comes up into its level. Started in a little early on this one, and well, it got kind of within that like 50-cent range. Probably should have, again, been more patient with it. So, a little too quick out the gate for me. So that's where I'll need to make a correction. Gets closer to the level, added 2 to correct there, which is good because, again, that's one of the things. I'm not using enough size to correct my average. It's just my timing, both execution timing and, again, where you execute. I mean, how to phrase that. My execution timing in terms of how close we are to, say, levels and things like that needs to get cleaned up. And again, it's really showing itself. So I also started early, like I said. So that's where I got in with 3 contracts, came up into the risk level, and then dumped out. And again, was able to basically have a small green trade here off those 3. I'm trying to remember what the P&L was on that one. One sec. And the P&L on that one was $19 for the 3. So obviously, if I had done this the appropriate way, and this is what I would define as appropriate, waiting for it to actually come into the level, could even start in with again, 2 there, even though, again, oh, actually, no, I take that back. 1 would have been appropriate there and held the 2 for risk. Because we do that, again, the average would have been up in here, which would, again, put you down in here, which makes us, again, from $20 to about, I don't know, $75 ish, depending on how you pay yourself coming out of this. But again, pay down into the level and then just kind of work it as it kind of tries to figure out what it wants to do. So that's, again, a critique I need to make. Again, execution timing, not being in a hurry essentially to get into the trade. You need to be patient. And again, with patience, in order to be patient, you got to have a plan, as Pat would just put to us today. So it's one of those things where I need to do a better job with my planning. So that is what happened on Monday. All in all, good to be kind of like, see that I'm not getting wrecked by, again, like, I don't know, thinking back about how I traded before, again, a couple of years ago, where that would have probably set me back probably a week or two, just trying to figure out like, what did I do right, what did I do wrong, getting really hung up on it and second guessing and lacking confidence and things like that. So all in all, happy to just get right back into it and not even kind of miss a beat. So that is kind of what happened on Monday, and that shows what high level coaching and mentoring can do. So if that is something you are looking for, I highly recommend you pursue a coach and mentor. And my recommendation for that person is Pat Mitchell over at Trick Trades. So check him out if you want to. Other than that, that's all I have for this one. And I will catch you for the next one. Have a good one.